So, what makes this company great? Today's case study is Hermes, and we're also going to look at what is the company worth? What's its valuation? First, let's look at the background of the company. So, what makes Hermes products so unique and iconic? Well, the company has 7,000 craftspeople with 76% of manufacturing happening in France. Then there's that scarcity and limitedness of the products. The Birkin bags, arguably the most iconic Hermes classics, are high quality and extremely hard to get. Also, the products need to be ordered months before they're ready and available for sale. And this is what I found fascinating. The company only has 300 stores, and half of them are in Asia, accounting for half of revenue. 133 stores in Asia Pacific, 101 in Europe, 29 of those are in France, and then 57 stores in the Americas, and 9 stores in Near and Middle East. So if you really wanted to rush to get a bag, you're not going to go and be able to do that in their stores. You're going to have to order, and it takes time. So did you know that some Hermes bags were named after celebrities? I think most people know this, but just in case, that Birkin bag was named after Jane Birkin. And the Kelly bag was named after actress Grace Kelly. Very famous people. So let's look at the revenue breakdown in 2022. 18% was coming from Americas, which is pretty small when you think about the market potential of America and the power of that brand. 9% is coming from France, from that one relatively small country compared to, let's say, the US, but the origin of Hermes. 13% from the rest of Europe. So really, you can see there's not that much coming from Americas, Europe, and France. 48% is coming from the rest of Asia Pacific, so that's China, Southeast Asia, and the like. 10% of revenues come from Japan, that tiny little country relative to, let's say, Europe as an example. And then 2% come from others. So how does the revenue break down by segment? Well, leather goods and saddlery comes in at about 43% of total revenue. And ready-to-wear and accessories come in at about 26%. And then there's silk and textile. There's also watches, and there's perfume and beauty, and then there's other areas. So what are the best sellers? Well, the Birkin bag for sure, the Kelly bag for sure, and the Constance bag. Those three are super, super great sellers. Now let's take a minute and think about the competitive strategy of Hermes. First of all, it was founded in France in 1837. It's in the consumer discretionary sector with 19,700 employees and about $12 billion in revenue. So what are its main products or segments or divisions or brands? Leather goods and saddlery, which we've just seen, ready-to-wear accessories, and then perfumes are major divisions. So what is the company's competitive advantage? Competitive advantage is coming through craftsmanship, exclusivity, and luxury brand positioning. And how is it achieved? Well, it's achieved by upholding exceptional quality standards, limited production quantities, carefully controlled distribution channels, and nurturing a strong reputation for high-end fashion and accessories. Let's take a step back and see that the family business was founded by Thierry Hermes in 1837. And it was carried on to his son, another son, a son-in-law, another son of that one, and then a son. And then we have Axel Dumas' nephew. And here we can see that the family actually controls about 65% of the company. But let's hear from Axel Dumas himself.
We try to grow by 7-8% per year in volume and with the price increase. And that has been our strategy for many years. And why did we put it this way? Is because we need to train the craftsmen. And it's something that is very simple within Hermes, is that a bag is done by one person. if I want to tailorize production, I probably increase production. But it's very important for us that one person do a bag. And this person is going to do it in 15 hours. There is 15 hours of unstitching. And I think part of the success of Hermes is not waiting for your bags. Part of the success of Hermes is having an incredible product that we are the only one to do. And that's really something that I want to keep alive, regardless of the revenue. Having said that, have you seen, if we take as a reference 19, which has been a great year, leather have increased by 23%. And I'm very happy about this construction. And we continue our line, which is opening a new manufacturer at human scale, because we try to have only 300 craftsmen so that everybody know by their first name. And that's the depth of the strategy about it, and continue like that. So I'm continuing to have this kind of growth. What was surprising, and a happy surprise, was the growth of all the other métiers. Usually in our industry, when you have a big crisis, leather is the one that's doing well and compensate for the other. This time, leather did great, and that's why we grow by 33% compared to 19, and all the other métiers did incredibly well. So I think that it's why we are a family company, and why we keep to be a standalone company, is that it's much more important for us to keep the value of craftsmanship, to keep the value of quality, and we never compromise any of it for any production goal. We try to grow by 7.
That's fantastic to understand a little bit more, in particular, about the idea of craftsmanship. Now, here's an interesting recent article that talks about Hermes wins permanent ban on Meta Birkin NFT sales. And basically, they filed a lawsuit on trademark infringement, and they won. And let's look at the latest news and what's going on. Well, quarterly results is the latest, and we can see the results for the first half of 2023. And basically, they produced EPS of 21.41 euros per share, which was 32% year-on-year higher and 26% half on half compared to the second half of the prior year. That's an incredible performance off of already what was an incredible performance. So amazing what's happening there. And this is a case when you're forecasting a company, you have to be careful when they're doing so well that you just don't forecast that to infinity. So here's an interesting thing that's recently happened. The company's paid a $76 million bonus. Remember, there's 19,700 employees worldwide, and 12,400 of them are based in France. And in February of 2023, the company paid an exceptional bonus of $4,000 to every employee worldwide on top of additional pay increases awarded in 2022. So this was a massive 2022 dividend. At the April 2023 general meeting, a dividend proposal of $13 per share was made. And you can see what that looks like. It's incredible. Already, they were paying, let's say, $4.50 in 2018, 19, and 20, and then it went up to $8 in dividend, and then 13. This just shows how strong the company is doing. So now let's look at the valuation. What is this company worth? Well, what I try to do is look at the free cash flow forecasts, and what you can see on this, and I'll just grab my pen to go down. What I'm really focused on is this free cash flow to the firm line, and this is my 5-year forecast. And you can see right there that I'm expecting it to go up to about 5,164 in free cash flow per year in 2027. Now, again, you have to be super careful when you're in a situation where the company's been doing super well. Is that sustainable? Or is that a one-off and it's going to come down? So at this point, I'm going to carry the 3,539 into 2023 by saying we're going to have 4,077 in free cash flow to the firm, and then slowly and steadily increase from there. Maybe I'm even being a little bit aggressive. You could come down with that. But let's just take that forecast right there. And then let's bring in our discounted cash flow analysis. And the key thing that I want to start with is the cost of equity. Nobody ever really knows what the cost of equity is, but I'm going to estimate it at about 10%. And because the company has no debt, what that means is that the weighted average cost of capital is about the same. And the result is when you look at a free cash flow valuation or a free cash flow to equity valuation, you're going to get about the same result because there really is no noticeable debt. Also, the dividend discount model output is about 323 euros per share versus about almost €700 per share on a free cash flow basis. Now, all of these are deeply below the share price. And the dividend discount model basically just shows a lower number because the company's not paying out all of its cash as dividend. So we can say, what's the value of this business? Well, it's about $700. Now, when you compare that to the stock market price of $1,776 or euros, it's an incredibly expensive stock. Now, part of that's because so much excitement's been going on with the profits, so much excitement's going on with the dividends, but it's very possible that people are not thinking about the recurring profits and cash flows, and therefore, I would say that this company is significantly overvalued. Now, I could play around with this forecast and get those numbers up for the free cash flow of the firm, but there's no way they're going to get up to 1,776. Well, what about, let's check it out on a multiple basis. The PE ratio of Hermes is 43.5 times 2023 and about 40 times 2024. And that's for, let's just look at 2024 because that's really what we're buying now. We're talking about paying 40 times in earnings for 10% earnings growth based upon my forecast. It may end up being much higher than that, but I'll try to keep my forecast conservative. But no matter what happens with my EPS forecast, let's look at price to book ratio. And what we can see is that you're paying 10.6 times price to book in 2024 compared to, in France, the average company's trading at 3 times. So we can say that it's a little bit more than 3 times over the price to book ratio of France. But also, let's look at the ROE. The ROE of the company is about double the ROE of the average company in France. And the result of this is that I think you can see that the company is somewhat overvalued on a multiple basis. Now, again, there may be something I'm missing in my analysis. And so, what about your company? What's your company worth? So if you lead a company with $15 million or more in revenue, just send me a message and let's discuss the value of your company. Or do you want to become an expert in valuation? Join the next Valuation Masterclass Bootcamp. Just go to valuationmasterclass.com/bootcamp. Now let's talk about competitive advantage. The question is the company financially world-class? So here's the method I use as an investor and business owner to measure whether a company has a competitive advantage. I call it the world-class benchmarking scorecard that we developed about 10 years ago. Here's how I construct a scorecard for any company. First, we gather the yearly and quarterly financial data of 26,000 companies worldwide, and we then calculate each company's profitable growth score, which is a composite measure of both profitability and growth. And after that, we rank the subject company relative to sector peers of a similar size. And basically, decile rankings is what we use. So 1 is best and 10 is worst. So if a company has a score of 1 or 2, I'm going to say they're financially world class. Now, we assess the company's performance over the prior 4 years and PTM, meaning past 12 months. So now let's ask the question, is the company financially world class? Well, before we do that, let's look at LVMH, a major competitor. And here we can see that LVMH has a ranking of 2 out of 10, which is financially world class. Now, in the past, LVMH was struggling a bit, but not too bad. They were always above average. But in 2021 and in the past 12 months of data that we have, then we can say that this company is financially world class. And if we look at LVMH, we can see that the company's making a net profit margin of about 18%. That's incredible when you consider that the average company's net profit margin worldwide over decades, the average for all companies is about 6%. But what about Hermes? Here we can see number 1 ranking, 4 years, and the past 12 months. Really, you have to just say it's incredible. The company has about a 30% net profit margin. This strategy is super successful. It's exclusivity, it's limited number of products, it's craftsmanship, it's all of these things. So I want to ask you, is your company financially world-class? If you lead a company with $15 million or more in revenue, just message me and I'll score your company.